Hi, this is Michael with BackToTheFutureTrading.com, and you're watching another episode of NinjaTrader Unplugged. There are some really great indicators that come with NinjaTrader for free, and we encourage traders when they first get the platform to explore. But a lot of times you get the free indicators and you're not really sure what to do with them. You got this wonderful tool set and you look down at it and you right click on your chart and you have all these wonderful things to play with, but no one really tells you what to do with them. And a lot of the vendors online, because they're free, they don't really take the time to explain some of the things with you because you can't make money off something that came for free. But I'd encourage everyone when they get their software to delve a little deeper, at least at first, before you start exploring out into the partner ecosystem with other vendors, and take a look at some of the indicators that come for free. One that I really like is the Williams %R, and I don't have too much time to go into the theory of it, but it's a really accurate indicator in terms of helping to identify overbought and oversold areas and then shifts in momentum. It does it in a very unique way that an indicator like a MACD, for example, can't give you. And I want to show you a little trick here that I've learned over the years that will help you potentially find some good entries and exits in the markets that you trade, using two techniques that a lot of people use with the Williams %R. And I'll be saving this template and showing you how to get it here in a few minutes. One of the things you'll notice is that Williams %R indicator with NinjaTrader plots two lines. I've chosen to make them red and green here. That historical overbought, oversold type area where you're looking for the market to do things when it gets down into those areas. One of the techniques that we teach is to watch for it to get above the overbought and get below the oversold line and look for the crossovers. So if you look here right now, you'll see that when the line broke through and then crossed over back to the other side, I put a blue arrow up top. So here it broke through, it stayed above, and then on this arrow, it closes back below. And that's where I put a blue arrow. And then similarly, when it gets below the green line, when it gets below the oversold line, and then closes back above, that's where I'm putting a blue arrow. So when we see that condition take place, cross below, close above, that's when I'm putting the up arrow. And you can see here when I do that across the course of the morning that we get some interesting signals as a result of placing them where we did. So that's one technique using Williams %R. Find the areas where it crosses above overbought, below oversold, and then wait for the next close out of that area. One of the ways you can really drill down into this is veering away from standard minute charts. For example, if you go to a 5 range chart, let's take a look. Get rid of all our drawing tools here from the minute bar. Okay, here's that same information on a 5 range chart. So we haven't changed anything other than reorganizing how that information appears on a chart. So instead of looking at the price every 60 seconds, we're asking the computer to break up price action in 5 tick bar chunks. And you'll notice that the Williams %R responds accordingly. And one of the reasons why is because the %R is referencing structure. It's referencing higher highs and lower lows and comparing things inside of structure. So when we give the indicator a better chance to breathe, we preserve structure better with a range chart or a tick chart or even a Renko chart. You see that the signals that emerge tend to be more reliable, especially with regards to trend and finding highs and lows. So if we come back and look, you'll see that with regards to trend, we're capturing the lows of the pullbacks right up until the breakdown of the trend right here. And then conversely, we're finding in almost every case the places where it's time to beat feet and take some profit with regards to trends. So you're seeing here pull back with trend, time to maybe get out. Pull back with trend, time to maybe cash out. Pull back with trend, time to maybe cash out. All using the standard free NinjaTrader indicator. Now this last technique is also a pretty conventional one, but again, if you're not specifically looking for it, people won't teach it to you. So here, what we're looking for is this. When we touch that green line, when we get to oversold, and we come back and break above the 50% area, this 50-50 line that I've drawn in by hand, when you get that first cross above, after being oversold, after 50, look at where the arrow comes in. So again, comes down, touches the green, closes above the blue right here, put a green arrow. Comes down, touches the green, closes above, put a green arrow. And same thing for here. Those are where potential entry signals exist. When we come up and touch the red line and close below the 50, I put a red arrow, drew them in by hand. Come up, touch the red line, close below the 50, put a red arrow, put a red arrow, put a red arrow, and then right here, put a red arrow. And when you pair that with a moving average, here I've got the free EMA slope color indicator that I give away in my resource area. You can see that we have a pretty powerful trend entry system, and that we'd be looking for signals to go long here, 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 and here. And now we're looking at a short now that we've closed below the moving average there. And again, all of this is from a free indicator that comes with the NinjaTrader platform once you get it and start using it. So two different systems. One, hitting overbought or oversold, waiting for the re-entry above and below these lines. And then two, watching for overbought, oversold, and then looking for a momentum shift coming out of that direction, crossing over the blue line back towards the other side. Both of which produce promising results that'll give you really good accuracy to get started without spending any extra money on a third-party program. At least when you're trying to save money in the very beginning, that becomes pretty handy. If this has been useful for you and you want to get this template, you can go to our website at backtothefuturetrading.com/unplugged. When you get to that page and you scroll down, you'll see a place to put your first name and your email address. Once you put that in, I'll send you a link to get the Dropbox folder where I save all of our free indicators for NinjaTrader customers and all of the templates that I create for this video. When you look at the Dropbox, look for today's video, NinjaTrader Unplugged, Williams %R, to receive the template for the folder that I've created. Be sure to download the EMA slope indicator too if you want to trade with trend. If you're curious about what we do when we're not building NinjaTrader Unplugged videos, you can also go to the demo area of our website at backtothefuturetrading.com/demo. And I'll be happy to show you some of the things we've been working on for the last 6 years to help NinjaTrader traders become successful and profitable. Thanks again. We'll look forward to producing another NinjaTrader Unplugged video for you soon. Be careful out there, and thanks again.